Morning everyone, this is Rajendran here joining from Bangalore, and welcome everyone to TradeZilla's daily market commentary. And then so today's date is 2nd March 2016, time is 8:30 a.m. And before getting into the global market sentiment, I just want to do an sound check. If you are able to hear my audio and video quality is fine, just raise your hands. Okay, great Ravindra. Thanks, Amir. Okay, thanks for the confirmation. So let's get into the session, right? So a little bit about me. I mean, I'm a system trader since 2010, and I guess most of the people here know about me. I'm running a site called marketcalls.in. So we are running since 2007. It talks about trading analysis strategies and trading softwares. Of course, very recently we partnered with NinjaTrader as well. And I'm a system trader for the last 5-6 years, and very lately I got into discrete trading as well. So more frequently we I thought of getting into stuff like understanding the traders' emotions, and then trading sentiment in the market. What is the overall market sentiment, and then we use how to use market profile and the trading sentiment to play the a game, right? So this is what I am practicing since 2015. I mean, it's almost a year has been passed in the live market, right? So I'm interested in trading analysis softwares and trading analysis. So I've done most of my works are there kept open source in a blog, marketcalls.in. And most of the trading systems are, you can get it from the library. You can go to marketcalls.in/library. There you can get all the works which I done with respect to AMI broker. And of course, very recently we started working on with NinjaTrader, and I guess more innovative stuff will happening on the NinjaTrader side as well. And I'm running a financial services startup since 2014. We are more into brokerage, data feed solutions, sort of. And of course, we are focusing on a lot of automated stuff as well, automating the analytics, and then trying to provide meaningful analytics to the traders. And if you want to know more about me, you can get a small link over here. Of course, the presentation will be shared and the video is getting recorded, right? So once the session is done, maybe around 10 o'clock or 11 o'clock, you should be able to see the post appearing in my website, right? Okay. So we are conducting an TradeZilla 2016. Let me keep this short, right? So this is my online mentorship program. So the core, what you'll be getting in this, you'll be getting an access to learn AMI broker, AFL programming, NinjaTrader concepts, market profile, trading sentiment analysis, and we'll be having a trading room where the market profile setup will be running, and we can share our an analysis in the during the live market, right? And every day we'll be having a daily market commentary on market days, and all the webinars will be conducted on weekends. And of course, yes, all the webinars will be recorded, and almost 6 months of access will be provided to everyone, so that even if you're missing any webinar, you can go through the portal and you can watch the recording again and again, as long as you're comfortable with your learning, right? And we'll be having a chat commentary session as well. We'll be using Slack to do a conversation. Of course, you can chat with the fellow participants as well, and you'll be having an access to sentimental analysis tools as well. Okay, so let's get into the global sentiment. Yesterday, Nifty moved and given a sharp move in the market, 3.37. Of course, it's a massive short covering rally, right? So, I mean, at least no one would have expected after the budget. And it almost Nifty futures went around 235 points odd, right? And the VIX was keep on dropping since prior to the budget, some 2 days prior to the budget, VIX started dropping up, and then on the budget day it dropped almost 10%, and again yesterday it dropped minus 6.1%, right? So I mean, whenever the event was there, yes, the drop in the VIX is expected, and still yesterday's drop in the VIX is more likely due to the short covering in the markets. Again, the US-China sentiment is pretty good. I mean, it's came below the psychological level 68, right? And otherwise, if you see, I mean, it was staying above the 68 for a couple of days prior to the budget. And this is the Asian market snapshot taken around 8:15 a.m. today. So Nikkei was trading almost up 4%, almost 4%, and Hang Seng up almost 500 points, and the SGX Nifty it was up 7340. I mean, compared to the previous day's close, I mean, we are more likely to open with an 100 points gap up, almost more than 100 points gap up, I should say that. Right, so it's so today's gap up in Nifty futures is more likely because of the global sentiment. It's more because of we classify this gaps as sentimental gaps. So sentimental gaps in the sense, I mean, whenever the market is moving up because of global sentiments, say because of China or because of US market. Yesterday US market gone up by 2.39%. S&P was up by 46 points, and otherwise, if you understand Dow Jones, I mean, if you would have watched Dow Jones was up almost around 348 points yesterday, right? And European markets, almost there was green everywhere, almost in every markets, right? DAX, CAC, FTSE, you name any markets, it was up by 2% or 1%, and complete Asian pack is positive, including China. And commodities, this is a snapshot taken again today morning, right? So yesterday crude was trading around 34 plus, and there was some rally in crude. And today, I mean, the crude and gold got settled down mildly, and trading crude was trading negatively 1.28% at this moment, and gold was trading at 0.44%, right? So let's get into the open interest lookup. So if you observe the open interest lookup for the series, right from the start of the March series, the 7,000 strike price was completely dominated by the retail traders, right? And the highest open interest built up was happened in 7,000 series, 7,000 strike puts. The retail traders are writing massively right from the start of the series. I mean, some sort of intelligence was there among the retail option players. Of course, I mean, from the option side, the retail players are quite intelligent, right? Sometimes it seems like they are losing, but again, they regain the control, and some sort of intelligence is shown in the retail option trading space, right? But if you look into the retail future trading space, we have some mixed emotions. Sometimes we have an dumb philosophy occurring over there when you try to analyze the retail future sentiment, right? So one thing was there, 7,000 was protected every day. If you notice the EOD charts, you would have seen that the Nifty was closing above 7,000 on EOD basis, right? Even on the budget day, Nifty managed to close above 7,000, and then the sharp pullback happened. So this is client index futures, nothing but the retail index futures, and you can see the blue lines are nothing but the Nifty, how the Nifty movement made, and you can see a lot of when the market is completely volatile, the retail traders are getting flip-flopping mode. They are moving. Whenever the market is going up, they are going up, and then the market is going down, they are going down, and every time they are trying to catch the trend very late over there. So right now, what they are doing, they are you can notice the green line. That is nothing but the net index shorts. The clients are, when the markets are going up after the budget, even on the budget day, they increase their shorts. And again, yesterday, a rally. People are not convinced with the rally. They thought someone would have thought like it could be a dead cat bounce, it could be a fake rally. But one thing is real, right? The rally is happening here, right? So again, I can see that the retail trading space on the futures are dumb. Either they are in flip-flopping mode, and or they are most of the time they try to trade against the trend, and very rarely they tend to write, but the the space in retail clients index, which is almost tough, confusing, and then most of the times it is contrary against what the market trend is, right? If you look at the FA index futures, the FA index futures are not positive on the overall. The sentiment is not positive, but one thing is happening over there. They are constantly covering their shorts. Of course, the yesterday short covering is again is mostly from the FA side. You can see the green line. The shorts are coming down from the FAs, and the FAs are increasing their longs as well. But overall, the sentiment from the FAs are net negative from the future side, right? But still, they deployed their cash on the NSE cash. I mean, overall they are positive on the cash market, and of course, it could be an sort of hedge. It could be a sort of hedge. But one thing is there, whenever FAs want to take, they'll try to take a bigger chunk, and whenever they want to lose, they lose in the smaller trend, right? So this is what, if you are observing over the historical charts over a period of time, you can observe the same thing again and again. In the main trend, they make money, the FAs make money, and in the counter rally, they tend to lose, right? So that's how they can do the business, right? So otherwise, if they constantly keep on winning with their intelligence, there's no business here in the Indian market, right? So everyone, if they constantly keep on making money, then you cannot find the counterparty, right? And client index options. Clients are showing slightly and intelligence here. They are the one who is writing the puts, and they are the one who are writing the calls. Calls are more likely, they are likely to be written at 7,500, right? So 7,500 is what some higher open interest is seen from the client option side, and put, it's more likely to be an 7,000 strike price, where the solid foundation has been made for the series. And FA index options, you can see the FAs are still bearish on the option front as well. As I said, I mean, they're losing in the counter rally. They're losing. The FAs are losing in the counter rally, but they had made enough returns in the February season. They're completely bearish, and they are remaining bearish, right? So that doesn't mean like market will fall or something like that. It may or it may not. But one thing is that whenever there is a counter rally, FI tend to lose. They lose little to the retails, and whenever they are making big, they make most of the money, and they give it to the least. Right. So let's. Let me go through this. So they are going naked puts as well as naked calls, right? So FIs are going naked. I mean, I'm saying naked in the sense overall the aggregated position. The aggregated position says they are mostly taking an naked puts, and also, I mean, next to that, they are also very bullish on. They are taking a naked calls as well, right? And equally, they are also writing call shots. So net overall FA is managing an mildly bearish stance in the market, whereas on the cash market they turned bullish yesterday. They deployed an 1,700 plus crores odd, and they also yesterday bought in the cash market. But the retail is pretty intelligent on the option side. They are making the real money there. The retail clients are making the real money there in the options. But the dumb ideas are seen in client futures side, right? So this is the overall picture from the open interest view. And of course, the data is highly dynamic. It changes every day, right? With respect to the Nifty, I mean, it has to be read on day-to-day basis, and it's so dynamic, so that you have to adapt to those changes. So what we can get from this picture, what other people are trying to do, it doesn't give any buy-sell signal sort of, but it gives you a real idea what is happening in the market, who is doing what, right? So this is more important key element for market profile, who is doing what. Okay, let's start with the top-down approach. We'll try to review the monthly, weekly, and then daily charts. We start with monthly charts. So this is a monthly chart. So you can see the Nifty future monthly chart was one-time framing. One-time framing in the sense it is constantly making lower lows and lower highs for the last 5 months, right? So this happened only once in Nifty spot. That is somewhere in 1996. We are one-time framing for completely for 6 months, and then the counter rally happened, right? So generally, bear market, even in 2008, this scenario is not observed. There is no one-time framing at all, right? So one-time framing minimum, we need at least minimum 4 candles forming either a lower low or lower low and lower high, or a higher low or a higher high, right? So what we are observing right now is a lower low with a lower high constantly. If the one-time framing has to stop, it can stop in 2 ways. That is what I will explain in the next slide. So this is what I posted in my Twitter handle on 25th, I think, yeah, it's 25th of February. So it's the 6 month of one-time framing happened in the Nifty spot chart. You can see the Nifty was happening, making a lower low with a lower high. 1, 2, 3, 4, 5, 6. Almost 6 months of one-time framing. If you notice the 7th month, it was a bullish engulfing bar. Bullish engulfing bar in the sense it made a higher high. So again, we are seeing in same philosophy, but it is not on 6 months of one-time framing. We are seeing in 5 months of one-time framing. And I'm seeing in too much of emotions among the in the market that everyone is expecting an market to test some 6,000 levels, 5,000 levels, 4,000 levels, right? So everyone is coming up with their own extreme targets, which is not sensible if you are a trader. So those who are those guys? Those guys are the non-thinkers. Don't have any clue about the market, how the market auctions. Market doesn't keep on going down, 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 right? So of course it done. But once once one time framing is there, somewhere it has to stop. But if it is going to stop, it has to make a higher high, right? So there are 2 possibilities we discussed here in our chat session. So one is there are 2 possibilities. One is bullish engulfing one. So bullish engulfing in the sense market will again make a newer low, and then in the March series, in the March month, and then it also make an higher high. That's how the trend comes to an end. The second one is an easier one, higher high and higher low. It doesn't test the February low. It keeps on making an higher high. It breaks the previous February month high, and then it makes an higher low. So far, higher low is in place. Are we going to make a higher high? It's up to the market, right? So, but one thing is that the 5 month of one time framing is there, that we are clearly visible. It's clearly visible on the monthly charts, right? So February, where is the February month high? So the February month high is somewhere around 7576 on the Nifty spot. So the one time framing has to come to an end. So 7576 has to be tested on the spot charts with this month, the March month, right? So it may take time, or it may come in one shot. So we don't have an idea, but one thing is really sure: there's a high probability of one-time framing coming to the end. And this is what we spoken in the previous TradeZilla daily market commentary as well, the part 2 session, right? So I'm just insisting the same thing again in this session as well. So we don't know, but that is high probability. We don't know whether it will come or not. But one thing we are seeing in the market is the one-time framing is, whenever the one-time framing is happening with an emotions, right? So it comes to the end at some point of time, right? So 2 things market can do. If we want to complete this one-time framing, it has to make a higher high. So again, this is on the weekly charts. Weekly charts so far looks like an we are seeing some clear trend, downtrend, followed by an congestion zone, right? So are we going to get out of a congestion zone for this week or next week? We have to revise this weekly pattern again and again. But one thing is there, the market does only one thing. It trends followed by a congestion, again followed by a trend, again market moves from trending phase to congestion phase, and then congestion phase to the trending phase. This is how the action happens. It doesn't keeps on moving up, and up, right? Once if it is doing that, then again it will start doing, and it gets into the congestion mode. And of course, you would know that, but this is a key thing in the market profile. I mean, and again you can see on the daily charts, still in the congestion phase. It was in congestion phase as last time mentioned. It was moving between 7,000 to 7,000 to 7,200 zone. It keep on making an complete congestion zone, and today more likely we are going to get out of it, right, with a gap, and this gap is more likely because of a sentimental gap. Is it going to get closed, or we are going to get remain open? Who is making these gaps? So who mostly makes the gap? The gaps are the one who enter the trend very late, those who want to catch the momentum, those who don't want to miss the opportunity in the market. They came late in the market, they jump onto the market because they don't want to miss the game, because market would have been moving to some their thinking would be like market would have been moving to 7,400 or 7,500 or 600, and they don't want to miss the bus, right? So they want to catch it on as soon as the market opens, right? So they are more likely the non-thinkers in the market. Those are the guys who brings momentum into the market. But I mean, those sentimental gaps, we've seen only one thing in the market. Those sentimental gaps which happening because of the global sentiment is more likely to be revisited again. The only thing is the today's gap is going to be little huge, almost 100 points. So if it is not repairing today, it may try to repair. The profit booking may come later, some other period, right? So it may take a couple of days to repair it. But one thing is sure, those sentimental gaps has to be repaired. It cannot. It cannot left in the system for a long time, right? And we are also noticing a couple of gaps here. So the one gap was around 7270 zone. Of course, it has to be those gap is going to be closed with another gap, and one more gap at 7374 zone. This is zone 7374 zone. So again, if market has to open, it may try to readily close those zone, and then it will try to do what it want to do. But again, we are left with a gap in the system. If you are in longs, I'm in long, so I'll try to book out my profits, and then I'll stay away, and then I'll try to watch what's happening in the market, and then I'll try to attempt whether market is trying to close the gap or not. So we'll try to focus on whether the market is trying to close the gap or profit booking is coming in, who is doing what. So those sort of analysis will be done during the live market session, right? And Bank Nifty futures, and if you notice Bank Nifty futures on the monthly charts, there is no one-time framing happening on as such in Nifty. So Bank Nifty made some little higher high during the month of Jan, and then it started falling down. So there was no one-time framing in the Bank Nifty futures on the monthly charts. And Bank Nifty it was positive on budget day, followed by an up day. Followed by an short covering. So Bank Nifty sentiment again looks positive, right? So you can notice that in Bank Nifty, again on the daily charts, you can see on one-time framing here, 1, 2, 3, and 4. One-time framing happened, and one-time framing got stopped the next day. Got stopped the very next day. Four higher highs followed by the one-time framing got stopped. What happened again? We seen on one time framing 1, 2, 3, and 4. So 4 continuous higher high, right? So 4 continuous higher high formation, and then again one time framing got stopped, right? So this is how we look into that. So just like that, looking into one time framing doesn't make sense, because one time framing can extend for an 5 days or 6 days or 7 days. So simply betting on the one time framing is not recommended. But one thing is, you have to monitor the emotions as well to try to understand what is exactly happening in the market, right? That is the key to play the one time frames, right? So the one time frame happens on daily, weekly, monthly, as well as on the 30 minutes. I mean, it happens across all the time frames. Generally, for intraday purpose, we look into the 30-minute chart, and for positional trading perspective, we look into the higher time frame charts. As simple as that. So trading sentiment, look into the trading sentiment. The trading sentiment holds turned positive yesterday. I mean, after a long time of a downtrend, the sentiment turned positive. So this sort of sentiment turn, most of the time the sentiment turns positive close to the peaks and close to the bottoms, right? So of course, I mean, we are using a Zurich RSX. So I mean, yes, it has its own noise, but compared to the other traditional classical indicators, it eliminates most of the noise from the system. It has its own noise, but I seen as an excellent combination with market profile. Because market profile is not an buy sell sort of system. One thing is, we can understand what is happening in the market, who is doing what, whether the buyers are in control or the sellers are in control, and so based on that, how to look into the sentiment, and then how to trade, how to take a trade decision. This is what we used to do with market profile along with the trading sentiment analysis. We use indicators as an sentimental indicators. We take data from the market to understand the emotions, and we'll try to take a trade decision based on this. Again, Nifty future sentiment turned positive on the budget day, right? I think it turned positive on the prior to the budget day, and then so far we're managing maintaining positive for the third day, right? So here are the tools we discussed. We have an live open interest tracker tool, and the participation wise open interest, which updates on daily basis, and the interactive charts where you can see the live NSE F&O charts, which updates with an every 5-minute frequency, right? So we have access to NSE cash, NSE futures, and NSE currency charts, and of course we have an UOD chart as well. So it's quite interactive, and it supports a lot of technical indicators. So market profile. So let's get into the market profile and try to understand what has happened in the market profile. Prior to get into that, so I want to show you the market profile stuff. What happened on budget day? So on the budget day, we had a strong excess. The strong excess in the sense there was a drop of, you can see at the G period, there was a drop of almost, how many points? Almost some, the G period started at almost around 7,000. There was a drop of nearly 140, 50 points, and then followed by a pullback. Almost all the pullback came fast, right? So it doesn't last for a long time. I mean, I think it lasted for some 10 to 15 minutes. There was a sharp drop followed by a sharp pullback, right? So this is what we call it as a strong excess, right? So this doesn't occur frequently. This occurs generally very close to the or exactly at the bottom or exactly at the peak in the market, right? So what does it say? The strong excess says it is an end of an auction, means the trend has been came to the end. So this happens on the budget day. This happens, I mean, when there was a clear uncertainty at when market was dipping below 6,000, 6,900 zone, and it was going dropping another 60 points. I mean, there was an extreme uncertainty in the market, right? So followed by a sharp pullback. These sort of things happen only when there is an extreme sentiment is happening in the market, and then there was strong emotions, strong negative feeling in the market, and no one knows why, right? And everyone has their own assumptions. So there was a sharp pullback. It is a strong excess. It means it is an end of an auction. Means those zones are most likely not to be revisited. More likely we are going to see an follow-up rally. On the evening, we posted in the chat commentary, we saying that excess is in place. Now a follow-up is required for the target towards 7550 spot. I mean, of course, it is supposed to be 7576 zone in the spot. And on the same day, the China cuts the triple R rate as 0.5. And you can see the one of our another participant was saying that only if we have a follow-up tomorrow, I guess, right? So, of course, the follow-up came up with an short covering. We haven't expected that. It was a massive short covering, of course. No one would have expected, right? So there was a short covering happening in the market the very next day. Anyways, we'll get into the profile and let's analyze what's happened over there, right? Let me go to my NinjaTrader charts. So I'm using an NinjaTrader Finalgo version of market profile. So if you understand market profile generates market generated information. You can understand who is in control in the market and who is trying to do what, whether a longer time frame is in control or shorter time frames are more likely and day time frame traders in control. By understanding these who is in control, we can get a significant amount of edge in the market. You can get a significant amount of edge in the market. Let me go through this little quicker. So each and every letters here, I can zoom in and zoom out of the charts, and you can see the letters are coming in. So it's not like the Elliott wave ABC. Right? The letters tracks the price movement every half an hour. So the first letter tracks how the price has been moved in the first half an hour, and then the letter B again the next half an hour, and how the price keeps on moving. So at the end of the time, if I can combine everything to the left hand side, okay, I can see a distribution, right? And also you can see an histogram over there. So these histograms are nothing but the volume, how the volume distribution has been done, whereas the letters represents how the price has been distributed over a period of time. And this generated on a day-to-day basis, we call it as a daily profile, right? So you can notice on the this is on the budget day. Budget day, you can see how the drop was. It was completely mad day. It was completely mad day. So market opened with an mild gap down, and then followed by a downside. And again, you can see there was a sharp pullback above, and then it dragged down the market. It dragged, and then the excess came up with a one-time framing. You can see the excess came up with an 1, 2, 3, 4, continuously making lower low, followed by an excess, followed by a sharp pullback, right? So excess with an excess indicates an emotion, and then one-time framing again indicates an emotion. So emotion followed by an emotion, it's more likely to be a pullback, right? So this is what we try to figure it out from market profile. Emotions after emotions, if there is happening up, it's more likely to be an mean reversions in the market, right? And again, the volatility is not over. From the peak, it almost tested around 7126, but again, it dropped almost 120 points from the peak to prove that. So that people have tried to come up with their own assumptions, because people don't try to understand the sharp recovery in the market, right? So there was a sharp recovery, excess in the place. No one, the one who cannot understand the market profile cannot understand what an excess is all about, right? People who are very new to the markets, or people don't understand this sort of stuff, what's happening in the market. They'll try to come up with an assumption like, if market fallen 120 points, let's go keep shorting this market. It's going to go one more round of downside reference. But that doesn't happen. So what happens is an short covering. It happened right from the beginning the next day on 1st of March. Let me zoom this so that you can understand. So it opened at almost around 7050. There was a gap up of some 30 plus points, and then it made its bottom, and then followed by a strong recovery in the first half an hour itself. It almost made to how much? It almost made almost 100 plus points, right? 100 and almost 130 130 odd points, 120 plus points, 120 points in the first half an hour, right? So whenever you're seeing a sharp recovery happening in that, followed by an downtrend, you should be really skeptical. Don't get into the market and shorting it whenever there is an. Don't try to do an counteraction whenever there is a sharp pullback in the first half an hour, especially when the market is completely down and you're seeing an short covering happening in the market, right? So when the short covering is going to happen, it's happening because people are really getting into the shorts. People are getting too much of emotions, right? So the other counterparty FIs are winding up, and this happens later. I mean, this has been stopped, and then the B period we came down again, 7126. Again, a pullback happened, and we never revisited back to zones, and we keep on going up, and up. Yes, one time framing was there, but market came up. It's not giving up. It's not giving up. One time framing was there, so at every time one time framing try to stop with an inside bar here. So we have a lot of weaker reference as well. I'm seeing a lot of emotions in the market. The initial recovery is more likely by the FIs, and lately it is more likely to be driven by the market sentiment, right? So later, I mean, probably retail traders who are in the longs, who are getting into fresh longs, would have taken those rally to the extremes. And today, more likely again, the late entrants are more likely to get into it, because that is where the classical technical indicators would have generated a buy, or someone else time frame, a higher time frame charts like an hourly would have triggered a buy in the late evening or today morning. So I mean, if you're very late if you're getting late into the trend, more likely you're going to lose the edge, right? So if you want to get the real edge in the market, you have to catch the trend little earlier, right? It's slightly riskier as well. That's what I experienced so far. It's slightly riskier, but that is the most rewarding one so far in the market. The late you enter, I mean, the late you get out. And we are also seeing a couple of anomalies in the market. Anomalies, if you understand anomalies represents emotions in the market, right? So I'm seeing this uptrend, the short covering happened with a lot of emotions, and let's see. I mean, these zones are more likely to be revisited, but the question is when. At this point of time, the yesterday value formed higher after an consolidated move. I mean, if you understand the February series 25, 26, 29, we are seeing a complete overlapping value area followed by a value area forming higher, and this value area formation higher came up with an sharp short covering rally. Right, and again we are going to have an emotional sentimental gap up. So we have a lot of reference level. This is what I spoken in the last thing. I mean, I'm seeing this as a lot of reference levels. So these reference level are nothing but the high probability reference level. One is an prominent POC coming at 72351 zone, and there is again a 7274 zone. There is a small gap. The small gap here. There's almost 1 point. No, I'm sorry. There is again 7274 is it's not a gap, but it is again a prominent POC. This is on 10th of February, and there was an 7240. I mean, this is what we are going to touch. This is again a prominent POC. So we have a lot of prominent POCs coming in. Almost 3 prominent POCs lined up, right? So 3 prominent POCs which are more likely to be revisited, and then the best case we can try to close this gap. This is the gap at there was a poor high at 7370, right? So more likely we may try to auction today in this zones, 7370 zone, if the momentum from the traders is really huge. But one thing is sure, the gaps are today's gap is not more likely to be created by the institutions. It's more likely to be created by the emotional traders. Right? The emotional traders are the one who come into the market very late, and then they create the momentum, and then they behave irrationally in the markets. They are not a rational traders; they are irrational traders. Irrational traders in the sense, I mean, they are the non-thinkers in the market. That's what John Dalton says. So we have the gap top as at 7392. Again, an interesting reference zone to me. And we have a lot of single prints, right? So these single prints, we have a reference level till 7,500 zones. So what are those reference levels? These reference levels are nothing but where people cover their shorts. I mean, or someone else stop loss, right? Someone else stop loss. More likely, those reference levels are their stop loss where people get uncomfortable and they are going to close down their shorts, and it is going to generate more momentum in the market, right? So what are the zones I'll be watching today? I'll be watching this prominent block level 7340, and again an poor high 7372, and in best case we can go till 7390 zone, right? So these are the option zones I'll be looking into it, but more often, I mean, if I'm in long position, so I would like to cover somewhere around 7340 or 7360 zone. And yes, so far the auction looks like we are targeting this 7550 zone. I mean, at least on the 7576 on the spot. I don't know, in futures it may come around 7576 or 7590 levels, right? So if you have any questions, you can ask me right away, so that we can close down the session. We can take some couple of questions and then we can close it down. There's a question panel over there. If you have any questions, you can ask me the questions right away. Okay, so I mean, if you, I guess then if there are no questions, then we came to the end. So thank you everyone. So let's meet again on 9th of March. This is the final session happening here. This is a complimentary session, of course. I mean, so once the session is over, and then from April 2nd onwards, we'll be taking the intensive course. It's an online mentorship program. So thanks everyone for your time being here and listening patiently to me. So thank you again. Anyways, the session will be recorded and will be posted in a couple of hours. Right? Thank you.